prices in San Diego have now been going up for 3 months in a row. We are nearly at the prices that we saw this time last year. In this video, I'm going to take you through the data for San Diego County and show you in general what is going on in the San Diego real estate market and what to expect if you are planning to buy a home. Before we get started, I would super appreciate it if you would subscribe to my channel and give this video a like if you find value in it so other people can find it as well. Let's go dive into the data. So this is the total market overview, which means it's all of San Diego County. So this is a very high level look. There will be drastic differences zip code by zip code. So if you have a question about a specific zip code, shoot me an email. My contact information is below. And I'm happy to send you the same information for that specific zip code, because what you see here, there are going to be zip codes that are performing completely the opposite of what you're seeing here. Don't take this as gospel for everything. It's just going to give you kind of a bird's eye view of overall the trends in the market. Let's start with new listings. Whenever we're looking at this, we are thinking about supply and demand. New listings is supply. So we can see that there was a lot more new homes coming on the market this time last year than there are today. And you can see it's a huge drop, nearly 42% down. This is what is keeping prices from plummeting, is the fact that there are no homes on the market. In 2006 and 7 and 8, there were tons of homes on the market. They were building so many homes. It was insane. There were like homes up the yin yang, and yet prices were going up, which didn't make sense because when you have lots of supply, prices shouldn't go up. Today, it's completely the opposite. We don't have very many homes at all. And this is what is keeping our prices from doing anything crazy. The demand side is in this pending and closed sales numbers. So you can see that last year, demand plummeted. Demand just dropped off a cliff. It was so much higher back here in 2021. And then mid 2022, when interest rates went up, it just dropped off a cliff. And you can see we are still way down from this time last year. And this time last year was before the interest rates went sky high. Demand dropped, but inventory did not increase. So that led to prices going down, but not like a free fall, like people have been waiting for and hoping for. We can see that. So we have median sales price and average sales price. I always prefer to look at median. Average is much more volatile. If you have a $94 million sale in La Jolla or Rancho Santa Fe or something like that, that's going to skew the average sales price, whereas the median sales price won't be impacted by that. So I prefer to look at it. You can see that prices have been going down since May, June of last year. But for the past 3 months, they've started to go back up again. Now, this is fairly normal. Like, we're going into the spring market. Spring prices always go up. And you can see that back here in 2021 as well. You can see it in 2022. Like, that's just what happens. But you can also see that if you look from, 2021 to 2022, this was it was kind of flat. There, was a little bit of a dip, but nothing exciting. This is a big old dip. Like, that was a drop. This is the crash. I don't expect to see any further crash than this, but this was a really big drop. And so now we're starting to recover. And you can see in the past month, it's kind of been a pretty big jump right there. And now prices are just a little bit behind where they were this time last year. Are we going to get all the way up to the May and June prices? I don't know. Possibly, because we don't have a lot of inventory. And if interest rates keep going down like they have been, demand will keep going up. So that's just going to drive prices up. I don't know how high they're going to get. And kind of the expectations for the year is that they're going to go up through spring. They'll go down again a little at the end of the year like they always do. And we may just end the year flat. I mean, there might just be nothing too exciting that happens throughout the whole year. Next year, that would change, and it's expected to start going up again very slowly, very little amounts, but up. So just know that if you're looking for some huge discounts, you may have already missed it in some areas. There are other areas where you can still get a really good deal. The competitiveness is coming back. So be aware. And we can see the competitiveness in the percentage of the original price received. So this is if the list price was 100,000, on average it was selling for 106,000. But right now it would actually only sell for 98,000. We like it when it sells for less. If you're a buyer, that's great. And that's what's been happening for the first few months of this year. And we saw it at the end of last year too. Houses were selling below list price. That's what caused the prices to go down. But you can see over the past 3 months, that's been changing. It's been going back up. We are seeing lots of places now that are over 100% again. And we're seeing, and the reason this is going up is we are seeing more and more bidding wars and more homes that are selling above list price. This is as we go into the spring market, competition increases just in general because it's the spring market and that's just what happens. But also as interest rates go down, more home buyers come back into the market. That drives up demand. We've already saw supply is going down. That means prices are going to go up. Also, just know, like I have a client right now who has a friend who bought a home back here, like in September of last year. We were actually in a time period where you could negotiate with sellers, and sellers were giving all kinds of money to buyers. They were paying for closing costs. They were paying for all the repairs. They were paying for interest rate buy downs. Like you could get a seller to pay for a lot, but that's not the case anymore. You can see this is going up. This is because it's getting more competitive and prices are going up. And it's much harder to get sellers to pay for things now than it was 6 months ago. So if you have a friend who got a really great deal at the end of last year, good for them for buying then. But interest rates have gone down now and competition has gone up, and now you don't get as good of a deal. Days on market. This is one thing that has actually been helping. Even though fewer homes have been coming on the market, they have been sitting longer. So this has actually helped buyers have more choices and not have to rush the same way. I mean, you can see like back here, like it was literally a weekend. Houses were on the market for a weekend. And if you were out of town that weekend, sorry, you missed the house. Recently, it's been like, okay, I was gone the first weekend, but I'm going to be able to see it next weekend. And that's awesome. But you can also see it starting to go back down. So that is starting to change. There are definitely homes that are selling in a weekend again. So you need to act a little more quickly than you would have just a couple months ago. Affordability index, I don't talk about. We all know San Diego's expensive, so we're just ignoring that. Homes for sale, months of supply. This goes back to the inventory. You can see that we've been in a downward trend ever since the middle of last year, and it hasn't started going back up yet. Here, this was last year. It had started going back up in January. We didn't see that this year. We just keep seeing it going down. If this doesn't change, prices will keep getting worse, especially if interest rates go down anymore, because the fewer homes there are to sell and the more people who want to buy them, the more the prices will go up. That's also going to bring the months of supply down. What this is saying is, how long would it take for these 2,250 homes to sell if demand stayed the same as it was currently? It would take 1.1 months. So if we have this many homes for sale and this demand has gone up or this has gone down, that's going to make this lower. And if you are looking for a stable market where prices are pretty much, demand and supply are fairly evenly matched, that's 4 to 6 months historically. And above 6 months was a buyer's market. So you can see we are still very much in a seller's market, even though for the past few months we've had, sellers giving concessions and stuff like that. We still technically weren't in a buyer's market. We were still technically in a seller's market. So there's a little bit of an oddity there, but yeah, we still have an inventory shortage. And unless we see this change, prices are going to keep going up. And I don't know what's going to trigger people to sell, because prices are higher than when they purchased. They also have lower interest rates. The vast majority of homeowners have interest rates in the 2% and the 3% range, and they don't want to sell their house to get a higher interest rate and a more expensive house. They'd rather just stay put. So until prices get high enough to make it worth it for them and interest rates go down enough to make that exchange worth it to them, we're not going to see more homes come on the market. I don't know what's going to happen there. And new home sales, they're not helping out a whole lot either. We're drastically short the number of new homes we need over the past decade because new home builders stopped building homes after the Great Recession, and they started picking up, and then the market fell off in May and they started backing off again from building new homes. So new home builders aren't going to save us here. And in San Diego, even if they are, they're building homes like inland and north and south and inland, not necessarily the places that people most want to live. So even then, the new construction homes, that's not going to be helping things. I have no idea what is going to improve our supply situation. I do very strongly believe that our demand will continue to go up because interest rates are expected to keep going down. Assuming demand goes up and supply stays the same, that means prices go up. I recommend getting in now. If you're going to buy something, buy now before prices go even higher. And then what you can do is when interest rates go down, which they're expected to go down a decent amount by the end of the year even, in 6 months after you purchase, you can refinance to that new lower interest rate and save a ton of money every month. Whatever you're paying now, you're not going to have to be paying forever. You're only going to have to pay until you refinance. That's why I recommend getting in now when prices are lower. As prices go up, interest rates will fall, but prices are going to be up. And this is just how it happens. So you can wait for interest rates to come down and prices will have gone up. You can wait for prices to come down, which they did, but now interest rates are higher. So this is why timing the market doesn't really work. You just have to get in when it makes most sense for you. And if you're thinking about doing it now, I wouldn't be scared to do it. As long as you're going to hold on to the house for a few years, you're going to be okay. That's the market update for April with the March data. If you have questions about any specific areas, please don't hesitate to email me and let me know. I will happily send you all of this information for your specific area. And if you have any other questions, put them below. Thanks for watching. Don't forget to subscribe and give this a like if it was helpful.